Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up for an extremely active Tuesday, the 1st of October, 2024. First thing, it's the beginning of the Jewish holiday. I want to wish one and all out there a very happy new year. This is a process that goes on and on for a while. You get Yom Kippur, Rosh Hashanah, so everything is going to be happening through there. I just said yesterday in my newsletter, I may have said it in my updates, I said, you know, if there's a time that you're going to talk where they're going to gang up on Israel to a lash back, it would be the Jewish holidays. It had the tradition in the Yom Kippur War. You know, Iran today unleashed its attack, 180 or so missiles, no real damage done, and now the question is, what does Israel do? I thought about it, and I said, well, you know, the first thing that rallied today was oil and the dollar and the bonds and the notes. I don't think Israel would go after their oil. It's an easy target. But you're hurting your own allies if oil prices go up, and then you get blamed. So they have two choices. One's radical. Go after the nuclear facilities. You have the cover. You've been attacked twice with their missiles. You have the cover, all right? Number two. You don't want to get that radical, then you got to do something much less and go after military installations, maybe a city. They fired at Tel Aviv, so I don't know. I think if you keep the civilians out of it, you're so much better off for humanity reasons. Let's not even talk war, for humanity. Not every Iranian is as radical, and I think you realize that as what we hear. I know, you know, it's just not the case. I know that. I have close friends that are Iranian, just not that way. Forget it. That's one of the things. So we'll see. What the market did is you took out all the pizzazz that the JOLTS report had. Because if you think about it, the reports were coming out, and then we got a news break. I was watching it this morning. It hit Bloomberg at the time I was watching. And first report, the White House says that an attack on Israel is imminent. If it's ICBM missiles, they'll take 12 minutes to hit once they're fired. The other missiles are about 3 times as long, and blah, blah, and they're going into all this. And then before you knew it, Israel was under attack. And you were watching it again, as we only can with CNN, and they had all the coverage there, and the skies lit up and everything going on, and everybody's crossing their fingers that most of these things get shot down, and they did. Did some get through? They did. What's Iran's take on it? 80% of them got through and hit their enemy, Israel. Okay. But if you were watching in Tel Aviv, you didn't see that. You did see in a distance, I remember the shot where a big explosion. Now, I don't know where that was, and Israel's not saying that all didn't get through. Some did get through. So that's where you're at. But I was on the JOLTS report. And when the JOLTS report came out, the headline number's strong, because if the headline was employers are adding that they want, in addition to the 7.6 they had last month, 7.6 and a fraction, they got up to over 8 million jobs being offered. So it's the opposite of what people thought was happening. But when you dove into the report, you saw that the hire rate and the quits rate, they're both falling sharply. So the employers are being very careful. They need help, but they're being very careful because this is a rough economy for a lot of people. They're wondering what the next steps are by the Fed, all right? I know everybody thinks it's so wonderful. If that were the case, there'd be hiring and business would be booming. Second part of the deal, longshoremen go out last night. So now you've got 37,000 or so on strike against Boeing. You got about 45,000 from the union and whatever. Those are on strike. Add to that all the trucking companies and all that have to put people on hold. There's nothing to do if you can't get into the ports. What is that? Now add on to that, what does Hurricane Helene in America do? For those of you that don't live in America that watch this, it's probably the storm of 1,000 years in many areas. I mean, total devastation. Big cities hurt. You know, big cities are relative. You go to the Carolinas, they're not like Chicago, San Francisco, or New York. But for those areas, they are bigger cities. Now, what are these people going to work? There's no electricity. There's no communication. There's no roads. There's no gas in many areas. So it's total devastation at this point. What is that going to do to the payroll numbers? So I think what happens is everything's getting skewed right now. I think Friday's payroll number, the pizzazz will be, there'll be certain people that look at it, oh, this is what it was, they'll dissect it. It won't have, in my opinion, that punch that you would normally expect from it. I may be wrong, but that's what I'm seeing. Tomorrow, we do get ADP. MBA in the morning first thing, ADP, and these are your gas stocks, all right? If you want to hit pause, you can go through that again. So let's take a look at the charts. One of the charts up today, 3.7% is Win. I guess when you're gambling in Macau and other areas, you don't care. And the market made a new high. There's some gaps under the chart that might be filled. There's 3 or 4 of them. You have a breakaway, you have your first gap, then a breakaway, and now you're into your runaway, all right? This will be possibly leading, if you gap again, to an exhaustion gap. We'll see if they work out. People give different names to the gaps along the way. The pattern is bullish, and it has been since here. You've had the higher lows, higher highs. The market has been over the 18-day average since here. So one of the things that I teach is that when you're over an 18-day average, you should only have bullish bias. And people will laugh at me, and I go, well, if you really look at a market, you never got caught picking a bottom via this. It's one thing to cover shorts. It's another thing to what? Pick a top. You don't want to do that in this. Buying the breaks is the way to go until the market is through with the uptrend, and it's not at this point. Is it overextended? Absolutely. How many days do you have? You're probably 6 days in a row now up and over the Bollinger Band. 7 is really pushing it in stocks. We'll see if the market can do the 7th. You're embedded. So now what could have been resistance, I don't want to say it is resistance. You just jumped the number 3 days ago. On the way down, is that going to offer support? It's a question. What I do think is going to happen is the big support's going to end up the combination of the 18 and the 100-day average. And as each day goes by, what's going to happen, just because you're going to drop on that 18 days back here and revalue with days up here, you're going to get up and over that number in a matter of just days, not weeks, days. In Rivian, you're still falling apart. This is the lowest so far, 1037. Again, under the 18-day average, keeps your bias down. A bearish crossover, 18 under the 100, just like I'm talking Win the other way, and you fell apart in the market. I mean, there are certain rules that I adhere to, and I teach in my charting courses that if you ingrain them, you start saying it's parts of a game plan. CrowdStrike, have I not been saying I thought you peaked out up here and I thought you'd pull back to the 18-day average? You don't believe it? You're watching me on YouTube. Go back 6, 7 days, 8 days. You'll see what I was saying. And I'm getting right there. Uranium, I think this is a dangerous area. It either plows through this and gets back now to 3058, or you lose the embedded reading and you get more of a correction. Up here, it's dangerous to buy. If you buy it on any break, you can't afford, in my opinion at least, to let it get back underneath 2836, yesterday's lows. If it does that, I think you break the pattern. You wouldn't have higher lows, higher highs. That's not a bear pattern. It would be, in my opinion, an indicator to chartists that maybe they don't want to be long anymore. And that chart is bullish. Long term, I'm very bullish. I've been saying that. I covered it as a special here, and I said people are going back to uranium. They are. I have a client that was following it for years. He was just too soon. Now it gets more interesting. In Dell, you got up to the upper 100-day average, and you got to the Bollinger Band, and boom, right on back down. But this is what we were talking about. I mean, if you're surprised at this, then you don't follow me. You had an embedded reading when you lose it, which you did yesterday. Before you go back up here, the odds favor you're going to go down to the closest main moving average. It's the red line, the 18-day average of closes. Let me get to it the right way. There we go. And that's what you did. Now is where I look for the market to try to find its footing. If it wants to just slide, it could go down there. I mean, if the market were to let go, that would be it. So we'll see. it's interesting. Toll Brothers, this has become now, and I explained why yesterday. I've replaced Linn with this. I am bullish. I think the trade is buying the pullbacks. I think that they'll come out if the red line closes under 79, and an open target is still the 159.97 level. 8XHB, same thing, embedded. I think the pros are buying. They'll come out if the red line closes under 79. Barring that, I think they're looking for 128.91. I don't see anything in XLF. I see a trend down, a bias up as you're staying over the 18-day average. Let somebody else, in my opinion, play that game. You're bullish on the industrial sector. Again, I haven't seen why, but the readings that are coming out are starting in different areas and different manufacturing numbers to get better and better. So we are seeing that there's a gradual turn. This market's built a lot of it in it. I'm going to repeat, it's embedded. Embedded means both these numbers are going sideways, as you see, well over 80, until the red line closes under 79 on pullbacks. I expect to see buyers, and when it closes under 79, I think they'll call it a day. Should it continue to the upside, why not 137.76 or higher, the upper Bollinger Band? Notice where the energy stopped, right up to the 100-day average and the Bollinger Band, and overbought. I think professional money came out of this today, and I know you'll say they're buying it, this thing is going to get bad. Well, it's already bad. It's not a skirmish anymore. You can't call 2 strikes by Iran on Israel and 1 strike back against Iran a skirmish anymore, not when you're firing missiles at each other. So it's a high-tech war without people involved, but using missiles within constraints. And I think that's the important thing, within constraints. They didn't fire 500 of them to swell the system. They didn't fire them. Hezbollah wasn't, to the best of my knowledge, firing hundreds at the same time. This thing's like, let's go to the gray line and try not to cross it. Well, somebody's going to cross it. Now we'll see what happens. If I were on the defense ministry, you know, I'd be a very big hawk. That doesn't mean hawks are right. And that's probably I'm wrong is what I'm saying. Higher highs, higher lows. Market was flirting. I was watching. It was losing the embedded reading, and then the news came out. It was down. Boom. And why? Because this market opened after the news. Got what I'm saying? That's why you jumped up. Gold was already moving on the first news report. And I watched it, so I know what I was looking at there. Silver up. Be careful of silver. It's acting more and more. It's lost the bullish embedded reading to do just what I said in my silver report. Go look at the silver report, IraEpstein.com. Copper market, still embedded. I'm a little surprised. I thought you'd pull back earlier than this. We'll see if it does. Remember, China's got Golden Dragon Week, so they're not in place. They're not in play. They're doing nothing. It's a national holiday for a week. BND, why didn't this market act better? I mean, all you could do is finish unchanged. Take out this low, you're probably going back to 74.95 on the daily chart. The weekly chart is more bullish than the daily. And UUP, this was the spot, in my opinion, where the pros came out today. You'll say, out? What's he saying? Well, you got the 200-day average, you got the Bollinger Band. You're not trending and you're not embedded. I think that that's where the pros are coming out, and I think they're going to, if you drop in the euro, and it could because there's so much play now on falling inflation, and the euro is going to be aggressive to go for the next cut, and we don't know what we're going to do, so the dollar could gain against it. You could be in play for down here, and certainly have resistance, I think, at the 18-day average. So you put it all together, you come up with game plans. That's why I have that silver report for you. I'll be with you first thing in the morning. You have yourself a great evening. Watch the debate tonight. I can't wait to watch it. I'm going to have dinner and watch it at the same time and get entertained. I've never seen Walsh talk, or Vance, to be honest with you. So I'm going to be really seeing what these two gentlemen have to say and how well they do against each other. Have a good evening.